One. And we're live. Hello, everyone, and welcome to our next panel on the topic of tokenomics and Web3 models. My name is Valentin Kalinov, and I'm Executive Director at ITSA. We at ITSA develop standards for the global token markets. We also organize these panel discussions around different topics around crypto. And today I'm very excited to have four exciting guests and distinguished guests with tons of knowledge around crypto. And I'm looking forward to our discussion. But before we start, I would like to give an overview of what's the aim of this panel and also do some housekeeping. And first of all, let's start with the overview. In this age of, in this digital age we are currently in, tokenomics has emerged as a vital aspect of blockchain technology, redefining business models and economic systems. Today, we are exploring the importance of incentive systems and decentralization and their impact on the Web3 ecosystem, and also the implications for various industries in the Web2 world. The aim of the panel is to understand the basic principles of these game-changing aspects of blockchain, smart contracts, and incentive design systems. Furthermore, we would like to also discuss or give some examples around business models, smart contracts, or decentralized applications, with the final aim to basically understand the basic role of a token in a token system. And let's do some housekeeping. This event is live streamed on YouTube, so our viewers can ask their questions in the comment section below, and the team will forward the questions to the panelists, so feel free to ask your questions. And if you like what we do at ITSA, follow us on LinkedIn, Twitter, or YouTube, or just type itsa.global. And we can start with the discussion. I will ask our panelists to do a quick introduction round. Tell us about what brought you to crypto, what was your journey, and what are you currently doing with crypto. And I would just like to follow our cover image from left to right, and I would like to start with Jacob. Jacob, let's start. Oh, the floor is yours.
Thanks. So my journey in crypto has been a couple of years now. I originally found crypto through a course at the university, through our prior shared boss, Sherman Washington, who taught Introduction to Blockchain at the University of Economics and Business in Vienna. I then followed through and just went full steam ahead. And after roughly 1 or 2 years of dealing a lot with crypto, I joined the institute that we worked at together, Valentin. After roughly 3 or 4 years at the Research Institute of Cryptoeconomics, I finished my PhD there on cryptoeconomics, and nowadays I work mostly as a freelancer. I have a couple of different affiliations. I'm still with the university. I'm still an affiliated researcher at the institute, where I still teach, and I have for a couple of years taught now the Introduction to Blockchain that I originally found crypto through. I'm also with Block Science, a US complex systems engineering company that focuses a lot on helping crypto protocols, but also traditional companies figure out how to better engineer mechanisms for online infrastructure, but also protocol stuff, application stuff, etc. So there's one of the best groups of people I've met so far. Love them completely. And then I also do work as advisor and consultancy on both Web3 companies such as Impact Scope, but also more traditional companies or organizations over time. And then in my free time, I spend a lot of time on research and hacking around on different crypto stuff.
Great, thank you. Let's follow up with Guido.
Yeah, I'm somehow following Jacob's path. So I think I got first into, well, everything related to blockchain should be, I think, in 2017. I was already doing my PhD, but actually also changed the university because I wanted to continue my research in blockchain or blockchain related topics. Went then to Frankfurt School, where I'm associate research associate at the Process Lab, and yeah, doing my PhD at the University of Bamberg in the chair for information systems, and being I am in the final phase now, so about to finish my PhD in hopefully a month.
Thanks, Guido. Max just joined us for a quick update. We're doing the introduction round, and now following up with Srishti and her introduction, and then it's your turn. Srishti, yours.
First of all, thank you for inviting me to this panel, and it's an esteemed panel here. I'm excited to have the discussion on tokenomics, the design patterns, and how we can actually impact the Web3 business models. Little about me, I have around 17 years of experience, last 3 years working extensively with enterprises on technologies, on the blockchain technology, and currently also working on the metaverse side on the lines of VR. So I've been involved professionally working on solution architects for different implementation use cases where blockchain technology can be utilized. And as an industry professional, I'm working on multiple voluntary roles where I'm trying to contribute to get frameworks in place with respect to token standards or any other regulations that are working. Because while we do understand the impact the technology has, not only to retail customers or DeFi users or DApp users, but essentially even the enterprises. And I think once we have these things in line, that's where blockchain would actually be one of the pioneer technologies being used for multiple use cases. So that's my background, and currently I'm leading the business for a US-based startup where essentially we are building a hybrid blockchain. And we are also launching our own metaverse land infrastructure. And we are an R&D company, a deep tech company, where we are focused on making complex technologies like Web3, which encompasses VR, XR, and blockchain, making it more accessible for the enterprises and for the masses.
Great. I'm glad to have like the technical side and also the research side on this panel. And last but not least, Max, can you tell us about your journey with crypto, how it started, how it was going on, and what are you currently doing with crypto?
Yeah. Hey guys. Sorry for being a bit late. I just moved to Mainz and I basically live out of a box, so everything is a bit in chaos. But yeah, I mean, I joined 2017, lost my money in altcoins, but got really interested in why some currencies are worth more than others. And yeah, basically started researching, trying to figure out, like white papers and so on, and got more attached or less attached with the space, but then around 1.5 years ago, I was like, people started, doing DeFi Summer about tokenomics, and I read a lot about this stuff, and I tried to figure out these principles. Read a lot of stuff from Block Science, which is, I think, a great resource. And then, started around a year ago with like professional tokenomics consulting, and now trying to figure out all kinds of different dimensions of tokenomics. Like we are like, there's tokenomics, but there's also like DAO and governance design and organization design going into this. And then there's like, usually a product or a marketplace somehow involved. So it's like it's not just, designing tokens, but like really trying to figure out how like the entire ecosystem works. And super excited that I work on GameFi, really famous and well-funded GameFi project, an art collective with a consultancy in Switzerland called Brightnote. So that's really cool and very versatile, and also extremely difficult, because I think, lots of the tokenomics have been broken. And now we kind of need to invent everything from scratch, and nobody wants to participate in governance. So we have to improve this as well. So yeah, long story short, it's like the coolest job in the world, but also difficult.
I guess also frustrating, depending on the market sentiment. But thanks, Max, for the introduction. And I'll just start with the discussion with a basic question for, we can start with Srishti, and then we move on with, depending on which direction we take, we'll further go into that. But how would you define tokenomics from, what role do you believe it plays in shaping Web3 businesses? Do you have your own definition for tokenomics, and what's it from your point of view? Srishti?
So I think on a very high level, Valentin, tokenomics essentially is a composite term including token and economics, where we're trying to simply put in place some metrics for analyzing the supply and demand of the token on one hand, but on the other hand, largely we want to synthesize and design a token incentive mechanism. So that has multiple building blocks and governing factors involved for tokenomics. But essentially, I think that's what tokenomics would principally be. And it's when we talk about the Web3 business models per se, it's one part of the ecosystem, where tokenomics would essentially give influencing behavior for the incentive part of it. While there will be other stakeholders, which would primarily be maybe a governance mechanism or the platform and the network. So that's what I feel. I mean, essentially on a very large, on a high level, that's what tokenomics means.
Okay. If somebody wants to add something to the tokenomics, how do you define it? Feel free to answer the question. Otherwise, we can continue with the discussion.
Well, basically, I will also see it like as an, incentivized cooperative structure of a project somehow, but also, at least for some projects, a hint on the embraces actual degree of decentralization a project has, or especially also a DAO.
Yeah, I have my own, which is a very bit scientific, but I would say it's like the science of how to coordinate actors in a decentralized network through incentive design. So it's basically, designing incentive mechanisms.
Yeah, and then of course there can be multiple ways actually. Of course we have PhD scholars with us on the panel, but the design models can be different. There's a lot of work that is being done on mechanism design. Some are going towards the optimization design. So it's an approach where we're moving towards a token engineering. So we are simulating things in a similar manner, which are being done in the traditional systems. So, yeah.
I very much like the coordination approach that Max just mentioned, where I think that if you separate the words and you look at what a token is, and for me, that's a representation of value and not necessarily just monetary value, but it can be more abstract forms of value and governance values and representation values, etc. And then from the economics view, yes, supply and demand is one of the most easy things to look at. So how do we supply this? How do we distribute it? And where does demand come from? How do we coordinate demand? But also, how do we do it along lines of not only maximizing for profit? How do we maximize other values that we might agree on? How do we align on values? How do we coordinate along dimensions that are traditionally underrepresented? How do we bring into the system a representation of externalities that we traditionally do not represent. And so I think that there's a lot of design space within tokenomics that not only concerns itself with supply dynamics that we have a lot of research on. How can we supply this over a lot of people? How do we airdrop stuff? How do we supply it in a fair manner? How do we supply it in a decentralized manner? And the demand side that is picking up a little is still underrepresented, but I don't think that these two aspects are the only aspects that we're looking on. So I do like the coordination approach because that encapsulates a lot of different metrics and dimensions that we might want to look at.
Maybe adding to the coordination approach in, well, a future where in a more advanced state of adoption and development of blockchain networks with regard to interoperability, also like, let's say, bridging mechanism between different blockchain projects, but also maybe into a Web2, Web 2.5, whatsoever you want to call it, world, like, well, in a more advanced stage than where we are now.
And then we can also make it more granular with respect to how the tokenomics are happening, whether it's happening within the blockchain community, that, you know, whether it's for the vesting schedule for the mining, or it's outside when you talk about the governance part of it. So it can be the micro tokenomics or the macro tokenomics. So of course, that's what I said. It's very high level. That's, you know, when you say the definition that can be there, but when you go in details, there are multiple building blocks involved in tokenomics or the token design, and then of course moving to the monetary design and the valuation part of it.
Before we go deep into designing these systems, I would actually want to also provide for the viewers information on how should viewers analyze their projects when they look at crypto. Like understanding this token design is very important to understand actually the project. And we see in these hype cycles in the bull markets, people are more interested not in the design, but rather in the marketing or the white paper of this project or what they're promising. When you do your token due diligence, what are you looking for? Are you reading white papers? Are you following the founders, looking at their backgrounds? What's your approach? Give you examples for beginners, just to get them prepared for the next bull market, to understand better projects and not focus on the marketing part of these projects. I guess, Guido, if you have any ideas, feel free to share. Well, you've been analyzing lots of DAOs, so you have a few examples, I guess.
Mostly it's not, well, if I do my research from personal side, I don't start with tokenomics. I just want to, well, the first step is interesting, what does the project actually do? And what is the use case they have? And is there an actual problem they want to solve? Or did they build a solution and now are somehow building a problem that may be solved in the future or something? Yeah, well, then some basic stuff like roadmap, white papers, the internet presence, then browsing a little bit through forums to see how responsive is the community, how helpful are they. And of course, for me, like, to have the information out there is important. Then we got to tokenomics. How's the what's the actual functionality of the token? What's the utility? Where does the money come from if tokens increase or decrease when it's traded? Is it like rather how's the token supply? Is it like finite? Is it being created at will, or are there mechanisms to also withdraw tokens out of the system? Token allocation, vesting period. So like all these things that give you a little bit of an idea how and if at all the funding members are interested to really build something here. And then of course also looking a little bit who is part of the team, with whom are they interrelated, like do they have like a big name so they have also something to lose if it's a scam or not. So like a mixture of logical steps to take, and then looking at some basics with regards to the basic token design. And well, after maybe deciding that this is something you should have a deeper look, and then okay, of course, dig a little bit deeper to the specific parts, but I think that Max is better in explaining this because, well, he's quite a professional in it.
I hope so. I think, you know, one really easy hack is people are over focusing on the supply usually, and so the supply shenanigans and stuff. And I mean, obviously it's important to find out if the project does some, you know, like some of the usual stuff that 20% of the supply goes to, I don't know, strategy, whatever that is, or, you know, some ways of like focusing on, or like, you know, not disclosing where that the funds are actually going to founders. But I think I'm like over stressing on demand usually, because it's like that there's these memes around in tokenomics where startup founders start and all they care is like their emission schedule and their pie chart. So really now I'm much more interested in, is there actually demand for a token, right? What's the kind of price floor? Like if everything breaks down and like the price goes to absolute zero, like where will it stop because there's natural demand for it? So the like utility benefits to the holder and so on, and value accrual obviously is an interesting thing that's not necessarily about a demand-sided mechanics, but I think an easy thing is to like just look at supply, and in the end I don't think it makes a huge difference if it's 9 billion tokens or 18 billion in the end, right? So my first suggestion would to look more on demand than on, you know, all the supply things.
I think additional to that, well, I don't have an investment view, but I think one other way to express that is that marketing material and white papers, etc., are usually quite useful to see where the communication focuses and what kind of goals are communicated. And do you focus on token holders versus token users? Do you focus on this being an investment for people, or do you focus on this being a system that is actually used and brings value to people? And then comparing that to the mechanisms that are implemented. And that can be supply mechanisms, but mostly these are demand mechanisms. So how do you facilitate people using the system? Is there an alignment between what you actually do with your mechanisms and what you communicate to your prospective users? Do you force artificial restrictions, such as oftentimes people think that you need to have some rarity and you need to have some NFT, while you don't really have a use case that needs it. You're just trying to enforce some artificial value on things. Also, are there any expectations about behavior or assumptions that you're making that you're baking into this into the design, such as if we design this in this way, people will surely want to make a profit, so they will use it in this way, so we'll design the incentives in that way. And then you're oftentimes also baking this, for example, into supply mechanisms where you mint a lot more and you dilute everybody else's value, but you're not generating new value, you're just redistributing it, which can be a valid form of a mechanism, but it's often communicated as a driver of value, that you're driving value by minting more and using it as an incentive, while that often just redistributes value in this ecosystem rather than driving more demand for it.
This is also a question for the DAO governance part of designing these token systems, and exactly these holders or majority holders of these tokens. And going back to traditional markets, we have the system of shareholders, where profit is maximized for the shareholders in a traditional company. When we look at the Web3 business model, are we trying to replicate what's happening in the real world, but amplifying it? Or what's the idea of crypto? Are we trying to find a better way to govern these projects? Or is it basically a capitalism, turbo capitalism, let's say, in driving governance directly to the community and maximizing profit maybe for the founders? Because we've seen a lot of projects recently, and there are many there are more bad examples than good ones. So what's actually the case for this? What's your opinion on that? Are we going into the wrong direction?
I'd just like to put a couple of thoughts here. I mean, going in the wrong direction, will not be able to comment on that, but I think there's a lot of foreplay that can be done with these custom solutions that we are building, right? So how the governance and the collaboration and the incentive mechanisms are being used is a critical aspect for the utilization which is happening. So that's one part of it, and I think the second part of it is more also on the awareness and the education from the end users, where the adaptation to the projects might not be communicated in the right way. So I think those would be my thoughts on this part of it.
I have to say, Valentin, that I absolutely agree with that statement. I think much of crypto is just driving hyper-financialization of stuff that doesn't need to be hyper-financialized. I do think that Web3 business models can transform this search for more and more private profit into something that for me seems much more logical, which is that we need better infrastructure online and we need better business models to develop, operate, and sustainably cooperate within infrastructure online. And I think that's where a lot of the design space still is evolving. I think that what we took from Web2 business models was this profit metric that now everything is focused on and communicated on, and it is very easy to communicate. A lot of other abstract benefits that we might gain are a lot harder to communicate, are a lot harder to measure, are a lot harder to target. So I see, and I don't think this is very deniable, that over the past years, we've seen a lot of projects come in, solely profit on or solely focus on token price and trying to sustain and maybe raise a token price rather than sustain other metrics that might be much more indicative of this being a useful project, of this being useful infrastructure, etc. And I do think that we will see business models that incorporate funding mechanisms for infrastructure, where you, for example, divert some transaction fees to fund infrastructure pools. We see it already, but I think we'll see it much more, where the business model is much less directed towards individual profit maximization and much more towards collective value creation. And I hope that this will be a driver for the near future as well.
I think we're also going into, I would say, the right direction. You know, like in the bull market, you had no incentives to do it right. Like everything just went up. You know, like your third copycat of something, you know, you just go onto a 10th blockchain, you build the next stacks, you know, then the meme coin and so on, and it just shoots up. But now it's like with the APYs are going down, real yield. There's like after Stephen came Sweat coin, which it created much less of a hype, but it's much more sustainable and it's actually used. And I think it has a few 100,000 users. So I think people kind of realized that the stuff matters and that we can't just build, you know, the same hype-driven rubbish that just goes up but can also equally break down as much. So yeah, I'm optimistic, I'd say.
I also think like this is the normal way things develop with every hype. Like bad projects and bad functionalities of token are washed out, better approaches are being developed. Like for instance, I mean, I'm not the biggest fan of governance tokens. For most of the projects, I really don't see a utility in them. They're just like a gamble on the price, because if we are like honest, most projects governance is either fake decentralization or, well, let's say decentralized up to a point where you can say what's your opinion on a certain matter, but you will never have a decision opportunity because the most tokens are within a small team. But still, I think that we have a major improvement here in this whole functionality, because having this the possibility within Discord forums and everything that people can like state their understanding, they can like put in ideas that for changes they want to implement, like the community is much more involved and more actively involved, and this helps these projects to actually work, if they like do their job right, to actually work closer to the actual problems and like developing the product in the direction the community needs it. And I think even though full decentralization, in my opinion, might be at this point not the right solution, but still having like a semi-decentralized structure where the community is still a lot involved, even though the decision rights in the end remain within a development team, is still like an enhancement to every form of business model where like this direct connection to the community or customer, however you want to call it, was not that present, and not that the community didn't have like this much to say. Because if there's, let's say there's an off-chain voting of a community, and then comes like in voting from the development side, we have the decision authority, and they vote against the will of the community, this can really go bad for a project. So the actual influence the users have, I think, are and will be increasing further.
So you're against on-chain voting, or at least the current state of it, Guido?
Well, the idea is cool if it's decentralized, but if you go like into tokenomics and stuff, in the end you will see that most projects have a centralized core. And I have to say, like in the phase of development where we are right now, I don't see a problem with being somehow centralized. As long as you communicate it in the right way, I think this is a cool thing. You can use blockchain, you can have a token and be a centralized core. As long as you can communicate it that way, why not? It could also, I mean, if you look at academic studies, semi-decentralized projects have performed way better than decentralized ones or centralized ones. It's just like, no matter what you do, just communicate it openly. But don't claim to be a DAO and to be decentralized and to be community driven, and with then having like 60 or 70% of the tokens within 5 or 10 people. This is like, what I would call like a pseudo DAO. And this is also not a red flag, because a lot of projects right now are like this. But this is the point where I say, okay, hey, this is like a marketing DAO. Just don't use this termination.
Exactly on the question of coordination and DAOs and governance. We see it in the legacy world, countries like authoritarian countries and democracies. We see sometimes authoritarian countries take decisions faster and they implement faster. And in a hyper decentralized world with DAOs, if we get to the point where we are really decentralized, would this mean that actually decision making will be much, much slower in a crypto world, or will take much more time to change these protocols? Because currently a lot of these are centralized, so developers say, okay, we'll push an update, we'll change the smart contracts, and we have something new, but we forgot about the community to ask them. So where's the trade-off here? Jacob, you have experience with also a lot of centralized, decentralized projects analysis. And what do you think? Is like the complete decentralization something good, or we need to centralize some aspects of these projects and leave other aspects decentralized?
I think full decentralization is an illusion anyways. I don't think you will ever fully decentralize anything. It also doesn't make so much sense. And there needs to be some distribution of certain aspects of governance that are better driven by smaller core groups that have specialization, that have skills, that are responsible to report to maybe larger governance structures. But for example, when we look at MakerDAO, you have core units that operate reasonably autonomously, but then they report and they have a mandate, etc., which is obviously needed. You cannot drive every decision with an on-chain vote. I do think that there needs to be a drive towards more decentralization. I think that's one of the core goals that we have, of having better representation of a more diverse group of stakeholders, of a more diverse group of or alignment on goals, etc. But on-chain voting is not the only governance tool. And I feel that what Guido also said is that in reality, what we've often seen is a marketing effort to present this as a DAO and there's on-chain voting, but the actual control and governance that is distributed to people is very, very minuscule and is mainly used as selling the token or some other marketing measure. What we will need over time is better tools to better distribute various forms of governance over the best group of participants that can do this, either some high-level strategic goals over everybody, and then some tactical or operational parts on smaller core groups that receive a mandate, better tools to visualize what kinds of metrics might be important in this system, to give better decision-making capabilities to people. Right now, what we often see is that decisions are made on a proposal that is then discussed in a forum, but the actual expertise that people can have on this is limited because everybody uses different words and everybody has a different opinion on this, and there's no way to discuss core metrics, core mechanisms in a very open and transparent way. And so what I feel is going to be a big driver for better governance is better tools, better statistics, better coordination and communication tools. I don't think that a forum plus on-chain voting is the final form of decentralized governance. There's much, much more design space that we already see and that we will see in the future being developed. And for that, I do think that we will need to drive towards better decentralization because, again, efficiency and profit maximization is a lot easier to focus on and to communicate than it is to drive metrics such as resilience and representation of minority voices and sustainability and long-term metrics. But these are super important to people. We just don't represent them very well right now.
No, very good points. And actually, I can follow up with a question for everyone. What do you, looking ahead of the trends in tokenomics, as Jacob mentioned, we need much more analytical tools. Do we need more simulation tools? Do we need more data to analyze all of these decisions? Or do we just need some education or this multi-stakeholder involvement from all sides of the industries to make these tokenomic designs better? What's your feeling, gut feeling, what's missing, or are all of these things missing currently?
Who wants to go first?
Happy to start. So I do think that one big driver for tokenomics will be things that are developed outside of tokenomics. I do think usability still needs to keep up or catch up quite a lot, and we will see developments in account abstraction, for example, giving us better interactions with these systems and giving us a wider design space for how we can safely interact with these systems. But then within tokenomics, I do feel that statistics and also visualizations for DAOs will play a big part, not only in the dashboards that we see right now, but also in standards for how you, if you don't have the resources, if you're a small organization that forms around some common goal and you want to achieve that, how do you visualize to outsiders what you're actually achieving, what your goals are, which kind of mechanisms you have for that? I think that will be super important. It can be quite opaque and complex to get into a new DAO, especially if you're not super technically capable. But we do need more voices from different expertises to come into this. And for that, we do need better accessibility and usability for these systems. So I do think that that is super important. And then I do think that out of tokenomics specifically, we need more ways to influence the demand side. That was mentioned a couple of times already. Incentivize not only through new emissions, and also better tools for non-competitive aspects. So I do like to stress infrastructure. I love building more infrastructure for people. But I do think that since we're adapting a lot of older tools, we're also adapting tools that are meant to be used for competitive aspects and for competitive business models, and oftentimes not so much for cooperative business models. And I do think that that will be a driver to develop these tools collectively as well.
Nice. I have one little addition to that.
Yeah.
Sorry. So I think, one thing I'm really looking forward to is also reputation and identity. Because like, if you look at something like Uniswap, the airdrop, like you could argue it was kind of successful, but like there's this beautiful Dune analysis of what happened. And literally, I think 98% of people just sold everything as soon as they got it. So we still don't have, we still don't understand who are the users, developers, contributors in our system that provide the most value. And it is just extremely inefficient to dump huge amounts of tokens on the market and then expect, magic to happen. And in the future, I hope that we can really identify the 10 most valuable contributor, and then based on reputation, based on identity, maybe on hybrid models, and then we can distribute tokens much better to the people who are actually creating value. I think that's like the ownership thesis, right?
Yeah, I think I completely agree with Jacob and Max. And just to add to that, I think the way we would take the token. So there is the design part of it, there is the mechanics part of it, but what is more critical is the utility part of it, which is also linked to the demand side of it. And once the project actually has a utility and it has a user base, which is not a indirect community that is being built through a marketing, but a community which actually has a need for the project, which has a utility for the project, that's when actually this is going to be working on a mass scale. So for something like it's going to be a system on the internet for say 6 to 7 stakeholders who are actually involved in this, who would not be by force collaborating, but the incentives and the design mechanisms would mandate them actually to interact and collaborate because of the incentive models or the data being aggregated. And that's the reason why we are working towards a token economy. And that would essentially be led with the enterprises leading the way, where a supply chain model or a logistics model, which in itself is very complex, has a lot of data silos, has a lot of information across multi-stakeholders, and a lot of forcing areas where the collaboration can happen. And that's where this tokenomics can actually bring huge impacts. And it is not going to be governed by simple projects, but actually utility that would be brought by the collaboration which would happen. And so that's going to be more of like, an ERP over the the token systems, how we are going to collaborate over an ecosystem. And that's when actually we will be able to utilize all the designing or the mechanics or the supply demand. Or I mean, of course, we've already worked on the engineering side of it, but I think the business side of it, the demand, the utility side of it is most critical, and then it can be a backward working from the objective and the goal, rather than first designing the token and then getting the user base. It should actually be the reverse side of it.
Very good points. I wanted to touch on a few topics. Maybe I like also to give examples about maybe good projects, bad projects. We've been talking about demand side for all of these tokens. And I always like the example of Bitcoin. Bitcoin in the beginning, it didn't have any price, but people were mining it regardless of if it has a price or not. So there was a demand, good coordination system for people just to like sustain the system even without getting paid. And I also had an interesting discussion with a developer of a blockchain Bitcoin wallet. I asked him, you don't work for anyone, but you develop this wallet and you don't get paid by anyone for developing this software, and it's open source. What's your value out of it? And he said, look, I own Bitcoin. The more value I provide to this ecosystem, the more the price of Bitcoin will rise, and I'll profit out of it. So these are completely new business models. And I also like giving examples, because examples always tell some story. And I would like to ask you also, do you have like favorite projects, or where you can say, okay, I like where this is going, and I would like to learn more about the token design, and I would say they have few ideas. We all know there's not a perfect project in crypto, but still, which one are your favorites? Do you have some examples, for example, like a good project? Because we can always say give bad examples, but we don't want to bash any projects, but just what's on your opinions? Rishti, you had an idea, I guess, in the discussion previously to the live stream.
Yeah, so I think like while we've had briefly touched upon all the parameters of a good token design, but I think while we're working on it, first I think the utility part of it is very important. And when we go on the mechanics part of it, how we're going to work on the supply, whether how much would be the circulating supply, the maximum supply, and getting a token distribution in plan, how essentially the token would be distributed among the different stakeholders, what would be the governance model that we'll have, how we will have mechanisms for voting between the community members, and then what would be the monetization part of it, whether the transaction fees and how those would be put into place. I think these are certain critical parameters that would be important. And apart from that, of course, how transparent we are actually in the tokenomics design to the community. That's also important, because how the vesting schedule would be happening, whether we are following inflationary or deflationary token, the monetization policy. These are really important while we are assessing a good token design. And I think I've personally seen Avalanche and Uniswap. I think they have really good token designs. Also, I think Near Protocol is having a very good token design based on how they've actually allocated the supply between the different stakeholders. So I think that those would be my thoughts.
Guido, like, I know governance is a different topic, but do you have a favorite DAO?
No. Well, there are a lot of DAOs that have like a good business case and everything. I just sometimes, have a little problem with the definition of a DAO. And if you now take it I see token more rather than a representation of a project at this point in time, and therefore for me interesting are things where I see the use case now in the future. And for me, these are like projects that work on scalability solution, oracles, like things where I see that they really have a significant use case that could improve the whole ecosystem. And yeah, for the rest, I like open communication. For instance, there's a project in Australia, it's called Power Ledger. I think that exists in 2015, 2016. They're completely centralized, and they don't make, they also stated like this, but it's functions. You have the token, it's like for tracing and trading of renewable energy, and it works. So they have a use case, it's implemented. These are things that I like. There doesn't need to be necessarily decentralized, but it's a project. It applies blockchain. They have a use case. They have a positive impact. And yeah, these are things that I rather look into. Governance and everything is an important point, as Jacob said, like to be developed further. But right now, for me, I rather look at the use case of the project and see a token rather as a representation of the program, a little bit like a share in the end.
Thanks. I also have a favorite, like not a favorite, but I also like looking at projects that are challenging the status quo. So for example, Reflexo Labs is developing a stable coin which is not pegged to the US dollar. That's a noble idea and I like it. Maybe there are some flaws in there, but still you have some projects working on a problem, and this is something I also find interesting about these new use cases, because it's easy to create. It's not easy like to create the new Tether, but I guess it is a use case which can be adopted from the Web2 system. But exactly these projects that want to challenge the status quo, they are the real ones to look after, I guess. And I also have maybe a last question, and we have a few questions from the audience, but I see also a lot of projects like Max, you mentioned Uniswap airdropping tokens onto the community. And I see we saw the L2s like the optimistic rollups, Optimism, Arbitrum. They started without a token because there wasn't the need for it. But now one of the projects decides to airdrop or to do something with a token just to raise a little bit more money and to maybe give some governance, offload the governance to a community. But still, aren't like these projects forced to airdrop when some projects similar to theirs airdrops as well, because this drives the community back to your project because of the incentive of getting free money? And then you're forced to do the same because you need to draw back the community to your project and airdrop again. And this is like a closed system where everybody it's run to the bottom system a little bit. Do you have any thoughts on that, Max? Similar to the Uniswap stuff and Arbitrum or Optimism kind of stuff.
Yeah, I mean, it's like, yeah, I mean, I think you summed it up already in the question you gave me. It's like, I think it's the pressure to launch a token at all cost. And like I said, my thesis is more like, in the future, we're going to launch tokens to the people that are actually creating value. I have a lot of friends who cashed out on Arbitrum, so cool, congrats to them. Amazing thing, but I think we definitely need to fix the whole. So like we kind of started at over optimizing supply. Now we figure out, okay, demand is super important. I think aligning towards a value creation, finding the right distribution mechanisms. I think that's another vertical where we can invest a lot of time, and we have to figure that out. As a next step.
Agree.
I think maybe to add to that real quick, I think I haven't seen conclusive evidence yet that airdropping to a wide number of people really drives long-term sustainable actions within that ecosystem. I might be wrong and just have missed it, but I didn't see it so far. So I think it's just a very short-term reaction oftentimes to feeling the need to have a governance token, feeling the need to raise capital via a token, and even though that token probably doesn't have too much other uses for you, so then you also need to add something on, and that's where the governance token comes back in. So I feel that we see a lot of these reactions and we've learned a lot from them, but so far I haven't seen any evidence that this is really the way to go forward. So I'm also similarly skeptical that aside from pandering to short-term profit incentives, this really drives a long-term engagement for an ecosystem.
Yeah, I also agree. Wida?
I also think like people, yeah, of course, in the best case, they get to know the project and maybe they try to use it a little bit, or so that the probability or the amount of the airdrop gets bigger. And in the best case, it's okay, this is cool, I'm going to keep it. But I also, the question is also always at what price are you doing this? Yeah, I mean, in the end, airdrops have become a gamble like tokens and ICOs and everything before. Right now, you have like pages who say, okay, this project is maybe going to throw an airdrop. You have to do this and that and start actually using something without you wanting it. Just like switching money from one side to another, just like to have an increased probability of an airdrop. And then the airdrop happens, the price rises and crashes down. And in the end, I mean, it's different, but it's not that much different from a Ponzi scheme. Like you get a lot of people in, people think this project is like the new really cool thing. And all of a sudden, like the first people start dropping out. And the last one is, the one who, crossed the line as the last one with the least money. And I mean, I'm not saying it's a Ponzi scheme, but like the mechanic is at least a little bit comparable.
Don't want to be the devil's advocate, but we, the crypto community, sometimes print more money than the Fed when talking about airdrops. So be careful when criticizing the Fed, because we're used to airdrops, which is basically printing money out of thin air. And I would like to see more regulation into that direction. But there is also a question for Guido. On a previous question, we talked about on-chain voting and this how it doesn't work. But there is a challenge. There's a challenge on your answer. How about Switzerland and the direct democracy in Switzerland? They have the governance system. We need a sensible, let's say, percentage of population, in the case of crypto community support threshold, for initiating a referendum. Is this some kind of solution to on-chain voting, or is this some direction where we can learn from Switzerland? I am not sure anyone is expert on Switzerland, but we've heard they have direct democracy. Still, I don't think the whole country runs on direct democracy. So what are your thoughts on that question?
I think the main difference is like one person, one vote. If you like put it directly into connection with Switzerland, and you know who the person is. So it's not like that Guido's address 1, 2, and 3, and 4 then has like 4 votes compared to Jacob's one address who has 1 vote. So I will outvote him by 4. So yeah, I mean, if it's well done, I have no problems with on-chain voting at all, because this is, at least for some questions, the way it should, like the development on our thoughts should go into that. The problem is also, as long as you don't know who are the people voting and how many addresses they have and everything, there will still always be the probability that people with huge amounts of money are able to outvote others. Either you know who the people are, or you don't know who the people are. Both is possible. Yeah, as I said, you could have like a developing team having X amount of tokens, and then on a private address they have even more, and they can with this then still outvote, even though their like development share is 20%. So yeah, in Switzerland you know who the people are, and they have 1 vote. This is the difference.
Just to add to that, I think in all these scenarios, the regulations would play a huge role. One, we are able to take care of the AML, the compliance, the KYC, all these things, once that can be taken care of. And if the user who's voting is a KYC user, these things would make much more sense.
There's actually a follow-up suggestion to have KYC NFTs for voting in DAOs. So 1 KYC NFT will grant you a vote in the DAO. Maybe a solution. Any thoughts on that?
So I'd like to share here that we are currently in stealth, but the blockchain we are building is a RegTech blockchain where we are actually solving for these problems. We have a legal SDK in place which would solve for minting of the asset as per the legal law of the country. The user onboarding would be KYC'd, and the network access would be given to a KYC user. So that would solve for the AML and the compliance part of it. So yes, that's something that is possible, and people will be able to leverage solutions very soon on that.
I do have a bit of an opposing opinion. I think that overall we need to drive governance with better privacy rather than using KYC as an overall solution. While I don't think that going against regulation is really useful, I do think that we have the chance to build better systems where you don't need KYC in every aspect. And we can, well, token-based voting obviously has a lot of flaws where we have some mitigations against it with some mechanisms like quadratic voting. There's nowadays fixes for some of the governance exploits via flash loans, etc. But I do think we should be driving towards better privacy for these mechanisms rather than designing with KYC from the outset. But obviously for industry, that is very, very hard to do. And it goes against regulation in many ways. It is a much harder problem to solve. So I'm not 100% sure that we will find the perfect voting mechanisms with privacy, but I think that should be the goal overall.
I think we can get into a discussion on this, but I think I'll take that offline with you, because privacy again is a larger topic where you talk about data privacy, or you're talking about something like a ZK snark where you're hiding the identity of the person. So that's again a different aspect to it. But yes, let's take that on a separate note.
And I think it also somehow depends on the use case in the project itself. I mean, there are some projects where privacy is more important than others. So you can have variable options, and also like, I don't know, you can have like a private version of project and a fork that is then like where privacy doesn't matter that much, and then you can see how both work out. I mean, this is the fun thing in the crypto game, right? You trial by error works somehow.
Like, for example, institutional investors prefer KYC solutions. So yeah, there are use cases for everyone. But I guess we are approaching the end of our discussion. It has been very interesting. I would like to talk to you guys 1 more hour, but we're out of time. So first of all, I want to thank you for being on this panel. It was very exciting for me and insightful, hopefully for the viewers. If you have some final words where people should find you or follow you, or do you have anything to say to the audience? Say it, and then we'll close the discussion. We can start again with Jacob, and then yeah.
Sure. I'm not super publicly available on various streams, but you can reach me through the university mail that is listed on the institute, or through the block science mail that is listed on the block science website. And you can reach me over my outdated LinkedIn as well. But otherwise, I don't have too many ending words. Probably just that let's build more infrastructure rather than competitive, profit-driven businesses for everything.
Thanks, Jacob. Guido?
Yeah, basically, well, most of my emails will eradicate now since I'm finishing my jobs. LinkedIn, I think, is the best way if somebody has any questions. Also, we got to, I don't know, research, needs papers for their master thesis, whatsoever. You're always free to reach out. And well, in the end, I think, especially for people, even if like the whole tokenomics game and everything is quite complicated at the beginning, just start reading through it, talk to people, go on events, exchange ideas, and just don't be afraid to pose a stupid question, because we all did. And especially, at least what I experienced, like for instance in Frankfurt in our community, the blockchain space is really helpful, and they are really into giving you tips, educating and talking to you, explaining stuff. So just go out there, and if you have a question, just reach out to somebody and see if you could solve it.
Totally agree. Srishti, final words?
Yeah, I think the best way to reach out to me would be through my LinkedIn handle. And just one last words from me, that we're all working towards towards an industry reinvention, where these tokenomics, token incentive designs can actually lead to Web3 business models. And these would be white label solutions, which be starting and kind of making huge impacts. So I would definitely suggest that people should get more insight into this, and hopefully we'll also launch some announcements soon of projects that we are working on.
Thanks. And last but not least, Max?
Yeah, I mean, I just changed my name, so you can add me on LinkedIn. There's also my email. I think there's even still my private phone number if you want to slide into my WhatsApp. But yeah, I mean, for me, it's really everything about, coordinating. New infrastructure is really cool, but I think there's so much we can do in building protocols, hyperstructures. I have an own idea I sometimes play with in machinations around mobility. So really like this coordination and also ownership. I really want to see like real ownership and not where, whales can control everything when we have one token, one vote, and where, I don't know, labor really is more or like is equally valuable in crypto, because at the moment it's just capital. But yeah, that's the future I want to see.
Thank you all. And I would like to add, I would like to see more alternative models to capitalism on steroids, on crypto, and less VC money pumping into useless projects. But this is how innovation happens. And this is the end of the discussion. I would like to say goodbye to all viewers and see you next time. Bye.
Cheers, guys.
Bye, everyone.
And guys, we are offline.